I am Tamara Corbell, Virtual CIO with Sikich. Thank you for joining our webinar today titled Strategic Guidance for Ever-Changing Cyber Insurance. I see we have a long list of attendees, and I'm not surprised due to the deep interest in the topic of cyber insurance. I'll be your moderator and one of your presenters today. We also have joining us Carla Borda from USI, who is educating on the world of cyber insurance underwriting. We are very excited to share information and methodologies as we've been collecting data for over the last year on the do's and don'ts of cyber insurance. About my background, I have been in the technology industry for over 30 years, helping organizations protect their biggest assets of their people, their clients, and their data. My role at Sikich is to provide strategic leadership to our managed service clients. I'm very happy to be here today to share information and be part of your cybersecurity journey. Carla, would you please introduce yourself?
Sure. Thank you, Tamara. Again, my name is Carla Borda. I'm a management liability consultant here at USI Insurance Services. My specialties are, as indicated on my list here, I've been handling cyber insurance since these policies were first introduced 20 plus years ago. So I'm happy to be with you guys today. Thank you.
Great. Thank you, Carla. Taking a moment to share information regarding our long history of over 35 years as Sikich. Alongside our technology and security services, we have dedicated practices for advisory, audit, accounting, tax, and consulting. We serve clients across 50 states with over 1,400 deep-level industry experts across our firm. It's a privilege to be part of the amazing Sikich team. Carla, would you mind sharing information regarding USI?
Sure, thank you. So for those that are not familiar with USI, we're one of the leading insurance brokers in the country. We're the fourth largest privately held broker in the United States. We have over 9,000 employees and 200 offices. My office is located here in Brookfield, Wisconsin. We also have one in Kimberly, Wisconsin, one in Bloomington, Minnesota, as well as others, obviously, but we're not restricted by territories, so we handle clients throughout the United States and internationally. We serve over 500,000 clients, and I'm very happy to be part of the USI team. At the next. In addition, I'm part of a subset at USI called their EPS unit, which is Executive and Professional Risk Solutions. So we are a group of individuals nationwide that specialize in certain specialty areas of insurance. These include management liability, including D&O, employment practices, fiduciary, crime, kidnap ransom, cyber and professional liability. So obviously the focus of today's call, I would say that I spend the majority of my time dealing with cyber risk and professional liability risks, as well as transactional risks. So this enables us to have a wide breadth of knowledge and expertise throughout the entire country, and we can call on our colleagues to provide additional support and insight in what's going on amongst our clients and also within their specific territories in the country. Next.
Thank you. Wonderful. Well, before we get started, taking a moment to remind everyone the information being provided is informational, and any decisions regarding your cybersecurity insurance should be consulted with your legal. Having your legal team review a cybersecurity policy is the most effective way in achieving best results. One last item, a bit of housekeeping on how the webinar is going to work today. We have a Q&A bar. If you have a question, please place the question in the Q&A bar and post in the chat. We will collect the information to provide a response. If anyone is having technical issues, please post the issue in the chat and we will work to resolve the issue as quickly as possible. We have a great team of support staff you can't see supporting Carla and I to work through any technical issues which may arise. Lastly, you don't need to memorize the slides. We will email the webinar recording to all of you tomorrow. You'll be able to request a follow-up on the survey at the end of the webinar. Let's get started. We have three main objectives for today's webinar. First of all, you'll learn what it takes to meet the requirements of a cyber insurance policy. Secondly, you will hear from an underwriting expert and her perspective how to avoid problems with cyber insurance coverage. Lastly, we will review our Sikich proactive approach to be prepared and act for an upcoming cyber insurance renewal. Let's begin with how to meet cyber insurance policy requirements. Understand your business level of risk. It may come as a surprise, but shopping for a policy is not the first step. Understanding risk and the threat landscape should be the first step to any process involving the purchase of a cyber security policy. No two businesses are alike, including their risk of becoming impacted by cybercrime. Therefore, a company should always consider to purchase a cyber insurance policy specific to its individual business risk level. The industry you work in, the size of your company can determine the risk level, and even your location can all have an effect how likely you are to experience a cyber attack. Companies in healthcare are often the target of cyber criminals for their sensitive data. Healthcare may require higher coverage limits than other company types, but healthcare is not alone. All companies handle sensitive data, and it is important to understand the requirements when handling data categorized as sensitive. Let's review a few questions to open the strategic conversation to avoid cybersecurity potential pitfalls. How much sensitive private information does your company handle and/or store? What types of highly protected information are under your duty? A few examples include client names, payment information, contact information, and employee information. They are all considered protected. What safeguards are in place to protect sensitive information? Is your organization actively working on a risk management program? Does your business have an internal security program? Or is a component of your cybersecurity outsourced? Another area to be aware of, modern day infrastructures are not automatically deemed safe. Many times, APIs or third-party integrations are overlooked. The implementation and use of third-party applications is becoming required for business. However, it's essential to understand the level of risk integration platforms may expose to your business. One important risk area commonly misunderstood, having all of your data in a hosted cloud solution does not eliminate risk. If data is lost in a cloud solution, what is your recovery plan? What happens if portions or parts of data is lost in a cloud solution? Who is responsible? And ultimately, who owns the incident? Lastly, sharing the role of prevention. Are your employees educated on cybercrime prevention? Reducing business risk starts with a comprehensive set of internal policies and aligned cybersecurity education program. One of the leading areas of cybercrime is internal threats. A comprehensive education program provides an understanding of employer responsibilities to reduce risk to themselves and your business. Awareness is a very important component in gaining an understanding. Awareness ultimately enables leaders to make timely, proactive decisions. Know your regulatory responsibilities. Businesses are required to follow a variety of privacy regulations set by various regulatory bodies. In addition, companies must adhere to various privacy acts. It's up to business owners to know their obligations for protecting sensitive personal information. Keep in mind, insurance policies may not cover businesses not compliant with local policy regulations. A few of the most well-known regulations and privacy acts are the General Data Protection Regulation, GDPR, and the California Consumer Protection Act, CCPA. GDPR and CCPA apply to all companies who store and process data belonging to EU citizens and California residents, regardless of where the company is located. The Cybersecurity Maturity Model Certification, CMMC, is another regulation. CMMC requires formal third-party auditors of defense industrial contractors through cybersecurity practices to ensure DoD contractors properly protect sensitive information. Know which regulation is a requirement for your business. A great way to keep up to date is subscribing to news articles, reading white papers, and industry trend reports. Determine your budget. The next step in choosing a cyber insurance policy is determining how much coverage you need and can afford. The amount of cyber insurance coverage your business needs is based on various factors. Number one, is your business budget prepared to meet security standards built into contractual obligations? Many new contracts are now requiring specific security standards to provide products and/or services. How much would it cost to recover from a cyber attack? Unknown recovery costs could include costs of restoring lost data, repairing damage to business applications, and hiring public relation firms due to impacted reputations. Cybersecurity claims can span months to years depending on the severity of the incident. Number three, the possibility is real. Being sued due to a cyber attack is occurring more and more in recent years, ultimately impacting company revenue. Be mindful of the costs of hiring a lawyer, potential fines, and settlements. The best way to determine how much cyber insurance coverage your business needs is to work with a cyber insurance broker. A broker can assess your business's risk and recommend the right amount of coverage to fit your needs. Before we hear from our cyber insurance consultant, let's review how to avoid a few common mistakes. Even if you have cyber insurance coverage, it is very important to have an active cybersecurity plan. Having a cybersecurity plan will minimize the damage when an attack occurs. Not having a cybersecurity plan could actually void your policy. And make sure to keep asking questions and don't be afraid to begin the conversation. What are the limits on the policy? How long will it take to respond to a cybersecurity incident? What is the claim process, and what is the length of time to receive payment? Does my policy cover a third-party security breach? The old English proverb, an ounce of prevention is worth a pound of cure. In 1733, Benjamin Franklin was so inspired, he wrote the proverb after learning about the city of Philadelphia's fire prevention methods. May you be inspired to have a conversation with your business to continue your cybersecurity journey. It is now time to hear from our cyber insurance consultant on the keys to underwriting cyber insurance. Carla, off to you.
Great, thank you. Well, thanks everyone for joining as well. The underwriting of cyber insurance in the application process certainly has become a minefield. So for those that have had cyber insurance in place, you will have experienced a dramatic shift in the market starting in about the second quarter, end of second quarter of 2021. So about the last 18 months. But in order to understand where we're at and what caused this shift in the market and underwriting standards, I think we need to take a step back to understand where cyber underwriting came from and to really appreciate where we're at today. So when we look at the history of cyber insurance, when it was first implemented back in the late 90s, for about the next 20 years, it was readily available. It was relatively inexpensive. We had more, as brokers, we had a harder time convincing companies that they needed insurance if they didn't hold significant amount of data, as Tamara indicated. Did we have claims? Sure, we had, Sony, Target, Heartland Ventures, those companies that had a tremendous amount of personally identifiable information. All other companies were considered relatively low risk. And so it was not uncommon for us to be able to have online rating portals where we could just input your revenues, your industry class, and be able to get a cyber quote within minutes. Well, that all changed dramatically. So when the new age of cyber underwriting will ask a lot more technical questions, which we'll get into here, require a lot more underwriting information. We started seeing cut in limits. So those carriers that were deploying limits, perhaps 5 million, were only offering maybe 2 or 2.5 million limits. Those that are offering 10 million now, it's common for only able to obtain 5 million at a time. Retentions have increased dramatically. So in prior years, we had retentions maybe $5,000, $10,000, $25,000, retention similar to a deductible. Now it's not. It's commonplace to have $100,000, $250,000, $500,000 retentions. We're also seeing premiums increase dramatically. It is not uncommon to be paying the same amount you were for a 5 million limit that you had paid for a 10 million limit in the past. We have many carriers that have been issuing non-renewals as they look to right-size their book of business based on industry and based on controls. And there are really a lack of cyber options that started occurring about 18 months ago, as I mentioned. Suddenly London markets lost capacity. We had domestic underwriters taking a whole new approach to underwriting cyber risk. So where does that leave us? Well, over recent developments, we've seen a dramatic increase in ransomware and cyber extortion demands and claims actually being paid. Statistics indicate that the majority of claims that are filed are paid by insurance carriers. Insurance carriers are implementing different exclusions, including war exclusions. And the cyber wildfire or systemic risk, something that's been in the back of mind for underwriters for many years, but was never really in the mainstream as far as what did that actually look like. Well, that all changed dramatically at the end of 2020, and I'll talk about that here in a minute. People continue to be the problem. Our weakest link are our employees. We continue to fall for phishing attacks, for business email compromise attacks, allowing bad actors into the network, even to falling for bounty programs where employees are paid by the bad actors in order to give up their credentials. And as Tamara indicated, we have an increasing regulatory environment with new regulations, on a consistent basis, not only GDPR and CCPA, but we have Biometric Act in Illinois. We have various New York regulations, federal regulations, all that need to be complied with from a security standpoint. Underwriting has gotten very technical, and we'll talk about that. And technology E&O, which was a forgotten risk, but is really a highlight now of those companies that provide any kind of technology product or services, has really come to the forefront for cyber risk. So next. Thank you. So if we look at this chart, you can see a dramatic increase in ransomware and cyber attacks starting in 2020 and going into 2021. Graphically, I think the increase is rather dramatic as it's laid out here. We had well-known and documented attacks for the Colonial Pipeline, CNA Insurance, who was down for several months, creating angst amongst not only insured but brokers and the inability of us to access their network. Acer, JBS Meats, Kaseya, among others. But as I mentioned, starting at the end of 2020 with the attack on the software program provided by SolarWinds Orion, it really highlighted the ability of bad actors to not target individual companies, but to target the technology that these companies are using, thereby impacting hundreds and thousands of companies in one fell swoop. This is a systemic risk that underwriters have been worried about for years, but never fully appreciated what the impact could be until SolarWinds hit. That was followed by the attacks on Microsoft Exchange, Acceleron, Blackbaud, Accenture, Ubiquity. So again, it highlighted a totally different attack aspect for these bad actors. Okay, next. So when we look at what kind of losses are covered under cyber insurance, I think it's important to understand that there's a myriad of types of claims that are covered under cyber insurance. So we talked about a little bit about ransomware and other costs, as well as the relating expenses in dealing with a ransomware attack. And I'll talk about that again here in a little bit more detail. Again, errors and omissions, primarily the technology errors and omissions. For those companies that provide any sort of technology product or service, not only do we have to be concerned about that attack, we have to be concerned about the errors and omissions in the failure of their technology product or service to measure up to what they sold it as, therefore opening up the company to additional liabilities. Network interruption. We're seeing a ton of network interruption attacks. So when you look at your network being down, what does that do for your income? And for how long is your network down? you're losing income every day. And what is your ability to restore and get your network back up and running as quickly as possible? We're seeing major claims coming in primarily from the technology and healthcare sectors due to network interruption attacks. So not only is it an attack against your network where you can lose income, but also on those other businesses that you rely upon, that contingent business income, your supply chain risks, your vendors, your customers. If they're subject to an attack, their network is down and they can no longer fill the contractual obligations to you. What does that do for your loss of income? Because now your product or your solution cannot be deployed because you're no longer able to get those products and services that you're dependent upon. Data hardware and restoration, as Tamara indicated, what do we have to do to restore digital assets? The forensic expenses. Forensic expenses can be a leading factor in cyber claims because in order to determine how a claim is handled, we need to understand who the bad actors are, how they access the network, what damage they've done, what damage they're threatening to conduct. And claims really revolve around the results of that forensic in-depth investigation. And those expenses can be very, very costly. We have cyber extortion. We have nation states. You look at North Korea, China, Russia, amongst others, who are looking just to conduct cyber terrorism. The impact to your reputation. So if you are subject to a cyber event and you also lose business and damage to your reputation, what does that look like to you as a company going forward? How do we mitigate any kind of expenses? Primarily with regard to privacy regulations, we have to send out notification letters, and those are very specific requirements based on those state and international regulations on what needs to get done. What services do we offer those individuals in order to minimize the damage done to their identity? ID theft repair, credit monitoring services, all of which are somewhat regulated by those regulatory requirements. Privacy regulation compliance, fines and penalties, payment card industry standards for anyone that has any exposure to card data. Now, a question I get frequently from insureds is, but we don't actually process our credit cards. Well, that's for the most part true. But that doesn't relieve you of any obligations because you've outsourced your credit card processing to a third-party vendor. Again, a lot will depend on your contract with that third-party payment processor. If you're the payment processor, of which I insure several, it's also very difficult and challenging to insure payment processors because of the amount of data, as you can well imagine. So when we're talking about cyber insurance and the causes of loss, there are a multitude of them, all of which are covered under a cyber insurance policy or can be to the full limit of liability. All depends on cyber underwriting, which we will get into. Okay, next. Thank you. Okay, so what have we seen and why are we talking about this? Well, 2020, as we all know, we had the pandemic. We saw a 300% increase in cybercrime since the pandemic. We also saw a 430% increase in supply chain attacks. The manufacturing sector also experienced a 75% increase in cyber claims. By sector, professional services, healthcare, manufacturing, financial services, retail are all atop the list of targets for cyber attacks. Ransomware as a service has become cheap, efficient, easy to use. You don't need gangs of bad actors in order to deploy ransomware. It's easily obtainable by anyone that has basic knowledge and desire to go to the dark side and conduct cyber attacks. So as we mentioned, we have expansive and stricter privacy regulations, breach notification laws, but I think another key factor in underwriting cyber insurance is the ability or inability rather to pay ransomware demands. So the U.S. Office of the Treasury, through their Office of Foreign Assets Control, or OFAC, has a list of known bad actors which prohibit paying a ransom demand to. So what happens is that the insurance underwriters, if they're presented with a cyber or ransomware claim need to conduct an OFAC check. So if the bad actor through forensics is determined to be someone or a group on that list, you are precluded from paying that ransom demand. In paying that demand, you are subject to additional fines and penalties by the federal government. So that puts the insured in a very precarious situation. You're under attack. Your network may be compromised. You may not be able to conduct any business until the bad actors release whatever hold they have on your network by paying a demand, but you're unable to pay that ransom demand because that group is on the OFAC list. So how do we navigate those waters? Also, with the strengthening of the American Cybersecurity Act of 2022, critical infrastructure entities need to report cyber incidents and ransom payments to the federal government. Okay, next. Okay, so what does this all come down to? It comes down to increased scrutiny and cyber hygiene. Cyber underwriting all come down to the controls that are in place. So you will have seen very technical questions being asked by cyber underwriters when evaluating your risk. Okay, next slide. Thank you. Okay, ransomware is at an all-time high, as we talked about. Carriers are demanding improved cyber hygiene. Again, the controls. We've compiled a list of the top 5 cyber controls that need to be put in place. And again, it depends on what limits your carriers are able to deploy. Again, as Tamara mentioned, you may be required through contractual language, through regulatory various regulatory compliance issues to carry certain limits or to have certain limits in place. You may not be able to get those limits. So where does that, or they may be unaffordable. So again, another precarious situation for insureds. So let's talk about how we navigate those waters. Okay, next slide. Okay, so again, controls. Cyber underwriters, in doing a look back at what's causing or how we could have mitigated or prevented these major claims that have come in 2020, 2021, and now into 2022, what if certain controls were in place, underwriters have determined that the impact would have been either eliminated or greatly decreased. So what are those factors? Multi-factor authentication. I will tell you that going into 2023, if you do not have MFA in place, it's a non-starter. I get this question a lot by insureds or potential insureds. We're working on it. It's not 100% completed. Until it's 100% implemented, you have no chance of getting any kind of cyber insurance. So MFA, multi-factor. 4, all email access, all remote access, all privileged access, as well as backups. It all becomes very critically important. Now, are there ways for bad actors to potentially get around MFA? Sure. But for the most part, it creates a stumbling block for access into your network. Endpoint detection and response. What product do you have in place that monitors and detects all of your endpoints? So what are we talking about when we're looking at endpoints? We're talking about any physical device connected to your network, laptops, desktops, tablets, servers, virtual networks. What outside product are you using that monitors all of those endpoints? And underwriters want to see 100% of your endpoints being monitored. 24/7 Security Operations Center. Again, we know that bad actors like to hit on weekends, on holidays, on those times where they have less opportunity to be detected. So what are you doing to monitor your network 24/7, 365? Is it done internally? Have you outsourced this to a third party? It becomes crucial that you have some way of monitoring your network 24/7. They want to know, and they will want to know if you're outsourcing this function, which company you've outsourced it to. Backups. Again, when we get to the dilemma of we are hit with a ransomware attack, now we can't pay the ransom, now what do we do? It all depends on our ability to restore the network through backups. There are numerous strains of malware that infect backups before you even know that they're in the network. So we need to make sure that your backups are secure, they're immutable, that it requires MFA, and are they in the cloud? Are they at a co-location? How often are you backing up? Have you tested your backups? Because we want to know how long it's going to take to restore your network and restore all of your services once we remove the malware and the bad actor from your system, and maybe even they deploy whatever they're threatening to deploy, but because we cannot pay the ransom demand, we need to be prepared for how we get back up and running as quickly as possible. Network segmentation. Critical systems. Are critical system access segregated from other access into the network? This includes any end-of-life software that you may have. Underwriters will focus on end-of-life software because there are known vulnerabilities in some end-of-life products that are no longer being patched. So bad actors will target end-of-life software as a way of infiltrating the network. What processes do you have in place for monitoring and preventing lateral movement within the network? What is your patching cadence? So when a patch is provided by it's a software vendor or product or service, what is your cadence for installing those patches? Are critical patches able to be deployed with a very short time frame? Because as the FBI has told me that if a patch is released on a Friday, and you don't deploy it until Monday, they will attack over the weekend. And it's critically important that those patches be deployed and be implemented as quickly as possible. Underwriters will want to know what your cadence is for deploying those patches. I also want to talk a little bit, although it's not on the slide, about the other technical areas that cyber underwriters are looking at. So while these are the top 5, they're certainly not the only ones. Privileged account management. This has really been highlighted over the last couple months on how you manage privileged access. So privileged access enables those with privilege, those privileged credentials, essentially the keys to the kingdom. Those are the individuals that can make configuration changes. They have full access to every part of the network. So obviously, if bad actors obtain those credentials, they have the ability to have full access to every portion of your network. So who has those credentials? Are those credentials separate from their everyday credentials, from their email access? How are you monitoring those credentials and monitoring what those with privileged accounts are accessing, and are you keeping logs of that? In addition to that, many underwriters are focusing on service accounts that have these elevated privileged access. So what are service accounts? So service accounts are non-human programs that are used to deploy a number of different services for a company. And many of them require privileged access. So again, because they're non-human, what do you have in place to monitor that privileged access? So some of the applications now will ask not only how many domain admin privileged accounts you have, but how many of those service accounts have those elevated privileges. Cyber underwriters will want to see those down to 0. Or if you do have some of those service accounts that are required, they will want to know what other mediating factors you have in place to monitor those access points. They will want to know if any of those service accounts touch any workstations. They will ask a lot more detailed questions about those service accounts. So when I see an application come in with a company that has 10 plus, sometimes close to 100 service accounts, it's a major, major red flag for cyber underwriters. They want those at 0 without, unless there's a very clear and detailed explanation from your IT professionals on why those service accounts are needed and what controls are in place around those. As As Tamara mentioned, with regard to databases and private information, they will want to know how many records are in your largest database. Are your database of records segmented? Is there different access points, and who has access to any of those records? They want to be sure that if a bad actor infiltrated the network, do they have access to all the records in one large database? Or are they only going to get a portion of the database? And they want to know what controls are around that. So although these are some of the highlighted areas, you can see from this that their cyber underwriters really focus on controls. It will very likely require your IT professionals, either internal or external, to be part of the conversation with cyber underwriters, so the underwriters understand in very graphic detail exactly what controls you have in place. Now, this is a major change, right? I mean, going back 2 years ago, you may have answered the question, no, we don't have MFA for, for email, or we don't have MFA for remote access, or, no one asked about privileged access. Now, it changed rather dramatically, and almost seems like overnight, where now we're asking these very technical questions before you're even able to apply to get a quote for cyber insurance. So for those companies that are not considered to be pristine from a cyber control standpoint, if they fall into a category where coverage can still be offered, we are seeing restrictions applied to the insurance. So we are seeing ransomware either being excluded, sublimited, or sublimited and have a co-insurance attached to them. So what does that mean? That means that in the event that you're a victim to a cyber attack, you may not get all of your limits available. You may only get, let's say, a half of your limit available, and you may need to pay an additional 25, maybe 50% of the loss in addition to your retention until all the controls are in place. We are also seeing specific exclusions for SolarWinds or Microsoft Exchange if you have an exposure to those. We are also they're also adding specific exclusions for end-of-life software, and depending on the amount of time that end-of-life software has been on the network and how long it's going to take you to remove that, you may only get a portion of the limits available for any attack emanating from end-of-life software if you are able to get the insurance at all. So the cyber underwriters have changed their appetite. No longer are they willing to write all different types of risks. Some risks are definitely harder than others to write, and our size of accounts also comes into play. So if you're under 100 million in revenues, you may have one set of underwriting criteria based on industry class. If you're over 100 million, it's totally different. If you're over $1 billion, it's different again. So it depends on your industry sector. Municipalities, again, there's documented attacks on municipalities and critical infrastructure. Educational institutions, you can imagine the amount of student data that is exposed in the event of an attack. Professional service firms, law firms, accounting firms, consulting firms, and frequently it's not the attack, the target of the attack. While it may be those firms, the cyber attackers are using that as a launching pad to get into their client networks. So it's just phase one of an overall attack, which makes them extremely high risk. Airlines, as you can imagine, the damage that does when airlines and airline reservation processes are blacked out because of a cyber attack. Healthcare continues to remain a high risk area, again, because of the patient data, because of being a highly regulated industry. But I would say in addition to that, any kind of entity that holds a large amount of either personally identifiable or personal healthcare information is considered a high risk. Technology firms, again, as we saw in 2020, any firm that provides a technology product and service is considered high risk because of the systemic and widespread risk of all of their customers being impacted due to a vulnerability attack by a bad actor. Okay. Go to the next slide. But before I get into some parts of the cyber insurance, I just want to just kind of go over what the application process looks like for applying for cyber insurance, either for new business or renewal, because it's considerably different than it was 2 years ago. So you're no longer going to be asked to complete a renewal application, which a renewal application had a series of questions on it, said, have there been any changes over the last year in a variety of different areas? That's no longer accepted by cyber underwriters. They will require a new business application, which explains in detail, again, about your business operations, what kind of products and services you provide to your customers. They will look at your website and look at how look at all the services that you're indicating on your website that you provide. You will be asked to complete ransomware supplemental applications. Now, these applications are very detailed with all of these control questions. It is the expectation of underwriters that when you answer these questions on controls, that they will all be yes, you already have these in place. You will be asked to complete potentially multiple ransomware supplemental applications because carriers frequently require their own application be completed. You'll be asked a list of all your domain names. The reason for this is that underwriters will commonly conduct third-party scans of your network, as I indicated. So they want to make sure that they're scanning all of the proper domains and don't try to eliminate as many false positives as possible. You will get a report on what the results of that scan are. You'll be given those areas that need to be remediated before you're able to even bind coverage. Now, the good news is that frequently underwriters will give you what the solution is, how you go about remediating those issues, and are more than willing to get on a call with your IT professionals if they need to walk through what needs to get done in order to eliminate those risk areas. MFA attestation. So not only do you need to indicate on your application that you have MFA in place, you'll need to complete potentially a separate document that you're attesting that yes, MFA is in place in all of these areas. Now, this becomes vitally important in claim scenarios where there have been instances, thankfully none of my insureds, but if you were to Google it, of carriers rescinding coverage because insureds attested to having MFA in place when it wasn't in place 100% of the time. You'll be asked to complete territory supplemental applications. Do you have any operations or personnel in Russia, Ukraine, Belarus? They will, if so, if they're willing to continue on with providing coverage, they will have exclusions for those territories and those countries, because we know that bad actors from those countries are looking to infiltrate networks through any open availability with those individuals within those territories. SolarWinds, Microsoft Exchange, Kaseya, there will be a series of questions. Do you have any exposure to any of those known vulnerabilities? If so, what have you done to remediate? What have you done to patch? There'll be very specific questions. There will be biometric supplemental questionnaires. Do you process, store, require any kind of biometric information? Fingerprints, eye scans, and the like. Are you storing any of that biometric data? There has been considerable claims, primarily coming out of Illinois companies, for biometric violations. So before applying for the insurance, you need to have the plan, and you need to have a plan to have all of these controls implemented. And I would engage in a company like Sikich, who can really work with you in order to make sure that all of these controls are in place before you apply for the insurance, because this will set up, if not, you have considerable roadblocks to even getting a renewal of your policy. And it makes the process much more arduous, much more frustrating for insureds and for yourselves, as well as for your brokers, because underwriters will require these. And again, now, if you have a policy and you're required to carry higher limits, Maybe you had a $10 million limit before, or a $20 million limit. Well, maybe those were like two $10 million policies to get up to your 20 million. Now those same limits need to get structured in pieces, 5 million at a time. So it takes time and it takes a lot of underwriting in order to get you to the same spot that you may have been in previously. There's a cost factor associated with that because every limit has every level of limits has an increased limit factor. Because cyber underwriters are looking at a minimum of $40 million as being a burn layer, meaning that they have shown that cyber attacks, if you're a subject of a cyber attack, the probability is extremely high for all of your limits being exhausted due to that attack. So if you have 5 million, 10 million, anything up to 40 million is considered to be a burn layer. So you will get the same level of underwriting scrutiny from those excess carriers as you are from your primary carrier. So again, you may have a primary in place, but as you look to build limits, you will get additional questions. It is also not uncommon for cyber underwriters to require a detailed call with your IT professionals to actually and a cybersecurity risk consultant from the carrier to really delve into some of these areas of concern and really understand the controls that you have in place in much greater detail than can even be provided on an application. Okay, so when we get to this, to get to the cyber policy, when we talk about all of these risks, all of these exposures, the overwhelming majority here can be covered under cyber insurance, which is why it makes it vitally important to make sure that all of these controls are in place so you can get the broadest coverage available. Because when we go back to that screen where I'm talking about cyber losses, all of these losses can be covered under a cyber insurance policy. So the first party, the liability costs, all third party when you're getting sued for a cyber event, for privacy, for network security, for media liability. You know, media liability is usually added on to cyber policy for any kind of advertising, what you display on your website. If you have someone's picture on your website that you didn't have permission to utilize, how you're presenting yourself on your website, you know, all those media liability exposures. The second building block are the mitigation costs, and these can be both first party and third party. You know, so how are we spending? You know, how are we deploying the notification expenses, credit payment PCI DSS regulation costs for the credit card industry standards. You know, if you are subject to a claim where it's alleged that card data has been compromised, the process is very different and different forensics need to be deployed as if you from what you had as a data breach. There are very stringent requirements that need to be undertaken with regard to that credit card data. And PCI is not your friend. The forensics are not necessarily your friend. They are looking to find out what lack of security caused breach of that credit card data. That can also be very costly. But also the first party, building block number 3, your first party expenses, the direct cost to you and your business from the network interruption, as I mentioned, your extra expense, your contingent network interruption. How do you restore data? What do you do with an extortion demand? And extortion demands are still being paid. The highest demand that's been paid that I've heard of has been $40 million. So sometimes it needs to get paid. Hopefully they're not on the OFAC list so you can pay them. But you know, it's a very, very difficult risk and it's a very costly risk. Bricking coverage. So if you have a malware that infiltrates your network and it makes hardware unusable and you need to replace physical hardware, do you have expenses on that? You know, not if not all property insurance will not cover physical equipment if it's damaged due to a malware attack or a virus. Voluntary shutdown. So again, we talk about network interruption, your loss of income. What happens if you lose income because you've noticed some sort of anomaly? You believe you're being subject to a network attack, and you voluntarily, intentionally shut down your network. in order to stop any infiltration? Is your policy going to provide coverage for your loss of income because you've intentionally shut down your network? It is not the bad actor that shut down your network. And what kind of expenses do you need to recuperate from reputational harm and damage caused by the attack to your business? So my closing thought on cyber insurance is that expect it to be very technical. It's an ongoing process. New controls are being asked every day. Start early. Do not wait to the last minute to submit your cyber application for a renewal, and then continue to work with your IT professionals, such as Sikich, to make sure that your controls meet the high standards that cyber underwriters are now requiring. Okay. Thank you, Tamara.
Thank you, Carla. As you have heard today, maintaining good cyber hygiene is crucial. So let's review how Sikich can assist with taking a proactive approach with your cybersecurity journey. Let's discuss a plan. Sikich provides a wide range of solutions to define, design, deploy, and monitor a business vision for cybersecurity. Our Tech 360 Managed Security Services incorporates 24/7 monitoring for endpoint detection and response, as well as a security operations center. If your team is not ready for a full security service, we have our Tech 360 Managed IT Services. Our team manages server, networking, and endpoint tasks, so your internal team can focus on more valuable business activities. Our professional IT services team designs and implements solutions from mid-market to the most complex environments. Through our wide range of security services, we can assist with designing services for every need within your security program. A cybersecurity program includes identifying a security and audit framework, assessing the organization against the framework, identifying and mitigating risk, and actively monitoring through our managed security services to reduce the potential of becoming a victim of cybercrime. No program can reduce 100% of the risk, but knowing who to call, who to trust, and who to listen to in the case of an incident is extremely important. What makes our Sikich services so special? Our talented team of experts. Sikich has a plethora of highly certified team members providing technical and security services to meet a wide range of tactical and strategic needs. Our goal for today's session was to educate, acknowledge, and provide options for a proactive cybersecurity plan to meet your insurance needs, as well as protecting your organization by reducing risk. It was such a pleasure spending time with all of you today. We will be sending out the recording as well as the answers to all the requested questions. For any additional information regarding our services, please contact info@sikich.com. Thank you for your time and have a wonderful day.